Hello everyone, welcome to today's deep dive US stock market live stream. I'm your host Anthony, and I truly appreciate that you all took time out of your busy schedules to be here. Every single live stream means a lot to me, because I know that people who are willing to spend time learning, understanding the market, and improving themselves are usually the ones who have plans for their future, who pursue growth, and who take their financial lives seriously. And I promise that I will use the most professional content, the most structured analysis, and the most in-depth research to reward the time you invest in yourself here. For today's session, I've prepared a highly valuable and content-rich live stream for you. We're going to look at the overall US market environment, interest rate policies, institutional capital flow, long-term industry trends, and the 5 most important stocks worth studying right now. I understand that this market moves extremely fast, and many investors feel lost in the volatility. They don't know what to buy, they're afraid to hold, they fear buying at the top, missing opportunities, or buying the dip, only to realize the dip wasn't the bottom. My goal today is to help you rebuild your understanding of the market so that you can regain clarity, confidence, and a structured way of making decisions. If this is your first time in my live stream, welcome. And I hope you stay patient, because what I'm sharing today isn't internet celebrity-style commentary, nor is it a few short conclusions tossed at you casually. What I'm giving you is complete research, data, logic, trend analysis, content designed specifically for people who want to walk the long path in the market. If you feel like you're learning something along the way, feel free to tap like and follow. Your support helps me continue bringing this level of depth and quality to everyone. Before we get into individual stocks, let's talk about the big picture. You all know this. The rise and fall of any stock can't be separated from the macro environment, especially interest rates, liquidity, economic cycles, and policy expectations. The Federal Reserve is currently at a critical inflection point. Inflation is stabilizing on the downside, and the market expects a potential rate cut cycle in the future. And whenever interest rates move down from high levels, U.S. equities, especially tech stocks, enter a phase of valuation expansion. Put simply, if rates stay high, tech valuations struggle. If rates start falling, tech stocks become the strongest force driving the market upward. Right now, all 3 major U.S. indices are sitting at structurally meaningful levels. The S&P 500 hit a new high and hasn't shown signs of large profit-taking. In fact, institutions continue to add positions. The Nasdaq, although volatile, has not broken its broader uptrend. The Dow Jones remains stable, supported by traditional industries. These are all signals of a market that is not weak, but in a structural bull phase, just with different sectors feeling different levels of pressure. I know many of you have 3 major concerns about the market. First, that tech stocks have risen too much and valuations are too expensive. Second, that the AI boom might be fading out. Third, that Fed policy could shift suddenly and cause a market reversal. Tonight, I will break all of this down one by one, and as we analyze the 5 stocks later, I will walk you through the logic, the trends, the competitive landscape, the institutional flow, and the long-term positioning, so you won't follow the crowd blindly, but instead, develop your own framework for judgment. Throughout the live stream today, I'll focus heavily on system and structure, not a messy stream of random opinions. I'll explain why the market behaves the way it does, how it might move next, which companies are sitting inside long-term trends, which companies have real moats, and which ones are merely short-term hype. And I also hope you interact with me throughout the session. Your questions often help everyone in the live stream gain new perspectives. If you feel like what I'm explaining has value, please give a like, anytime. Your support genuinely motivates me to keep producing high-quality content. The 5 stocks we're diving into today were carefully selected. They represent 5 of the strongest future trend directions. These trends include the compute infrastructure required for large-scale AI training, the global expansion of cloud service platforms, the revolutionary changes brought by autonomous driving and new energy, the network infrastructure powering AI data flow, and the high-certainty tech giants driven by advertising, cloud, and AI combined. We're not analyzing hype. We're analyzing trends. We're not chasing short-term noise. We're focusing on long-term value. We're not betting on temporary heat. We're studying structural changes in the industry. In this era, the companies that deliver long-term returns are the ones who control the core resources of the next decade. And the 5 companies we're discussing today all have that ability. Throughout today's live stream, each of the 5 stocks will be broken down using a professional institutional research framework: industry trends, company positioning, business model, financial structure, technical analysis, entry zones, profit-taking and stop-loss levels, 3-year outlook, and potential risks. After listening, you shouldn't only know what to do, you should understand why you're doing it. If you want me to keep doing deep dive live streams like this, don't forget to follow. That support is genuinely important to me. Only with your engagement can I continue investing time into collecting market data, reading institutional reports, analyzing trends, and transforming everything into live stream ready content. Now please get ready. We're about to jump into the core of today's session. If you think the opening has been helpful, drop a like and let me know you're ready. Up next, we're going to discuss the first key stock, and this company is going to be one of the most important driving forces in the global tech world for the next decade. Before we officially begin discussing the first stock, I need everyone to focus just a bit more, because what I'm about to explain will deeply influence your investment judgment for the next 3 to 5 years, possibly even longer. Tonight, we are discussing the most crucial, most irreplaceable, most central company in the entire AI revolution, a company that essentially represents the energy, transportation, tools, and infrastructure of the AI era all at once. If you've been with me for a while, you already know. I always spend extra time analyzing NVIDIA, because no matter what the market does, no matter the noise, the fear, the temporary pullbacks, on a long-term horizon, NVIDIA remains the heartbeat of the global tech ecosystem. It is the foundational supplier of compute power, and it is not replaceable. If you feel this content is valuable, please press like. It helps the live stream reach more people, and it motivates me to keep giving you the deepest insights possible. Let's start from the deepest layer, the industry structure, because understanding the underlying logic of an industry is far more important than staring at stock prices, technical charts, or short-term fluctuations. NVIDIA's long-term value has never been in its stock price. It lies in the position it holds within the global technology architecture. NVIDIA is not a traditional GPU manufacturer. Its real value is that, in the era of artificial intelligence, it controls the very foundation of computational infrastructure. Every major large language model you've heard of today, from ChatGPT to Gemini, from Meta's Llama to all types of advanced AI training systems, every one of them depends on NVIDIA. From cloud providers to national research laboratories, anything involving heavy AI computation, whether training or inference, runs primarily on NVIDIA hardware. Some people might say, isn't AMD also making AI chips? Doesn't Google have TPU? Isn't Meta developing its own accelerator? These are valid observations, but you must understand one fundamental truth. In AI, the real challenge is not, can you build a chip? The real challenge is, can you build an ecosystem that the entire world depends on? NVIDIA's deepest moat is not the GPU itself, it's CUDA. CUDA is an ecosystem that NVIDIA has built over more than a decade. An ecosystem so deeply integrated into the workflows of AI developers, data scientists, ML engineers, and research labs that switching away from it would be like asking the entire AI world to rewrite their foundational tools from scratch. Think about this. If you ask an AI company to switch from CUDA to another platform, they would need to rewrite millions of lines of code, rebuild their entire workflow, re-optimize all their models, retrain their engineering teams, and even then, performance isn't guaranteed. No rational enterprise would willingly do that unless forced. This is why NVIDIA's moat is deeper than hardware. It is locked into the global AI development process. Now, let's talk hardware. NVIDIA's GPUs are not graphics cards in the consumer sense. They are high-performance parallel computing accelerators designed specifically for deep learning, massive matrix operations, and scientific simulation. The H100, H200, and the upcoming Blackwell architecture are not just products. They are industry benchmarks. And here's the key. For the next 12 to 24 months, demand for these chips will remain far higher than supply. Every major tech titan, Amazon, Microsoft, Google, Meta, OpenAI, Tesla, and even governments around the world are rushing to secure NVIDIA chips. AI is in a compute arms race, and NVIDIA is the one selling the ammunition. Even if competitors produce remarkable chips, NVIDIA still dominates because competitors cannot replicate. CUDA, QDNN, Tensor, RT. Their entire software stack, developer lock-in. A decade of optimization and mindshare. Even if you had the same chip performance, you still couldn't catch up. Now let's address the concerns floating around the market. Competition, valuation, bubbles, industry cycles. I know many viewers wonder, has NVIDIA risen too much? Is there still room? Is this all an AI bubble ready to burst? These concerns sound logical, but let's break them down properly. First, the idea of an AI bubble is mostly an emotional expression, not a factual one. NVIDIA's revenue growth, profit expansion, and backlog orders are real, measurable, and verified. This isn't a story stock. AI compute demand isn't theoretical. It's exploding visibly across the globe. As AI models get larger and require faster iteration, compute demand grows exponentially. What we're seeing now is just the beginning. Future model architectures will require even more training cycles, more compute, more inference. Compute demand is not slowing, it is accelerating. Next, competition risk. Google has TPU, Meta has MTIA, AMD has MI300. Yes, these exist. But here's the part most people overlook. The AI computing market is not shrinking. It's expanding rapidly. Enterprises self-developing chips does not shrink NVIDIA's TAM. It expands the overall industry footprint. Even if these companies develop their own accelerators, they still purchase NVIDIA hardware for general-purpose workloads, for specialized models, and for workloads requiring flexibility and speed. So in reality, competition does not diminish NVIDIA. Competition grows the entire pie, and NVIDIA continues to hold the largest slice. Now, valuation. Yes, NVIDIA's valuation isn't cheap, but the company's growth far outpaces typical tech companies. When a company's revenue doubles, then doubles again, and its margins remain sky-high, valuation becomes secondary. NVIDIA's gross margins are enormous, its free cash flow is explosive, and it carries almost no debt. That means NVIDIA has one of the strongest financial foundations in the entire semiconductor industry. Let's move into the most important section. Where will NVIDIA's growth come from over the next 3 years? This is the key to understanding whether NVIDIA remains a long-term opportunity. Here are the 5 core drivers. 1. Global AI data center expansion. Every major country and tech company is doubling, tripling, even quadrupling their AI infrastructure. This is a multi-year structural trend. 2. AI inference commercialization. Most people only see the training cost, but inference, running the model for millions of users, requires exponentially more compute. This is NVIDIA's next massive growth curve. 3. Governments entering the AI race. AI compute demand has moved beyond companies. It has become national strategy. 4. AI integrating into real-world industries. Automotive, robotics, medicine, biotech, manufacturing, finance. Each one is a trillion-dollar market. 5. Blackwell upgrade cycle. The performance improvement is so significant that it will trigger a global data center refresh cycle. Put simply, NVIDIA's growth isn't peaking, it's only entering its middle phase. Now let's talk about recent news. Meta and Google strengthening their chip efforts does create short-term fear, and fear drives volatility. But if you understand the supply chain, you'll know their self-developed chips handle specific tasks. They are not replacing NVIDIA's general-purpose, large-scale training infrastructure. They still rely heavily on H100, H200 for large-scale model training. These companies aren't reducing NVIDIA usage. They're expanding total compute usage. Next, technical analysis. NVIDIA surged aggressively in previous months, so the recent pullback is not only normal, it's healthy. The long-term structure remains intact. Key moving averages still slope upward. On the daily chart, NVIDIA finished a full corrective structure. Strong support appears around the 230 to 240 region. This area is a heavy institutional accumulation zone. When a stock has institutional support, that zone becomes your best long-term entry. MACD returning near zero is a classic reset structure, not a bearish reversal. RSI cooling off removes overbought risk. Low volume pullback shows that sellers lack conviction. If we see a high volume breakout of short-term trend lines, that would signal a new wave of momentum. Now, let's talk strategy, because this is what many of you care about most. NVIDIA's ideal accumulation zone for long-term investors is 230, 240. If you're long-term, divide your position into 3 entries. Short-term traders should observe for signs of stabilization, shrinking sell volume, bullish reversal candles, MACD recrossing upward. Profit targets for wave traders sit around £300, 320. This is where valuation and supply tend to meet resistance. If NVIDIA breaks above 320 on strong volume, that opens the door to a new acceleration wave. Stop loss should be around 210. Below this, long-term trend structure weakens and re-evaluation is necessary. Risks include valuation, volatility, semiconductor competition, macro policy shifts, sector-wide tech correction. But from a long-term perspective, as long as the AI industry continues expanding, NVIDIA's role remains irreplaceable. And I need you to understand this clearly. NVIDIA is not an ordinary stock. It is the backbone of the entire AI revolution. Just like Amazon and Google were during the internet era, when an industry is still in its early stages, holding the core infrastructure means capturing the full wave of long-term returns. If this deep analysis helped you understand NVIDIA beyond the surface-level chatter, please tap like. Your support helps me continue preparing professional, high-quality content. Next, we'll move on to the second major stock of the night. Now let's move on to the second key stock of the day. Within the entire technology sector, this is one of those companies where the deeper you dig, the more you realize just how massive its long-term value is, and how much lower its risk is compared to other tech giants. In the AI wave, this company is not only a participant, but one of the biggest drivers. Its business is so broad and deeply integrated into global digital infrastructure that it defies simple categorization. It's not just a cloud provider. It's not just a software company. It's not a hardware company either. Its role is much bigger. It operates like the digital operating system of the modern enterprise world. In fact, you could say it's the digital backbone of every company in the AI era. The company we're talking about is Microsoft. And if you feel like the deeper I explain, the more value you're getting, please hit that like button in the live chat. Your support really motivates me to keep delivering this level of in-depth analysis. Microsoft's position in the AI megatrend. Most people only notice NVIDIA because it supplies the compute engines. But the deeper player, the one shaping how AI is actually used globally, is Microsoft. Why? Because Microsoft not only owns Azure, the world's second largest cloud platform, but also strategically tied itself to OpenAI, the creator of ChatGPT that all of you know so well. Microsoft is one of the biggest beneficiaries of the AI boom because almost all AI software, AI services, and AI-driven office tools ultimately run on its cloud, its infrastructure, and its enterprise ecosystem. Think of it like this. NVIDIA provides the engines. Microsoft builds the highways that deliver that power to every enterprise on Earth. This is why Microsoft is positioned better than almost anyone else in the AI era. Right now, millions of companies around the world are going through digital transformation powered directly by Microsoft's AI tools, especially Copilot. This is not hype, not a concept, not a future expectation. It is happening right now. And here's the key. AI-generated revenue inside Microsoft is recurring, high-margin, and extremely sticky. This is why Wall Street has never been worried about Microsoft's valuation. Microsoft's business model prints money consistently, quarter after quarter. Latest developments. Why Microsoft's growth is accelerating. Microsoft's cloud business, Azure, recently posted growth again far above market expectations. This is an incredibly powerful signal in the AI era because every AI workload, even ones using other companies' models, must run on cloud compute. The fact that Azure continues to grow at this rate means AI adoption isn't a concept. It is already a commercial reality. And one of Microsoft's biggest breakthroughs this year is the full integration of Copilot into the entire Office suite. Word, Excel, PowerPoint, Outlook Teams, Windows Developer Tools. Enterprise Security Stack. You may not realize how big this is, but think about it. These tools serve billions of global users every month. The moment you put AI inside them, the monetization potential becomes enormous. Microsoft essentially flipped a switch and injected AI into the world's most used productivity ecosystem. This is why institutions keep raising Microsoft's price target, $450, $480, $500. This isn't blind optimism. This is the reality of a business model with nearly unstoppable long-term visibility. If this breakdown is helping you see the bigger picture, hit that like button. It helps push the live stream to more people. Microsoft's strategic power in the AI value chain. Here's something most people overlook. Microsoft isn't following the AI trend. Microsoft is helping define it. Microsoft now influences every layer of the AI industry. Bottom layer, AI compute through Azure supercomputers. Middle layer, large language models, OpenAI plus Microsoft's own Phi series. Application layer, Office, Windows, Teams, GitHub, Dynamics, security. Enterprise layer, cloud infrastructure, corporate AI deployment. Developer layer, SDKs, APIs, fine-tuning tools, AI apps. This is a closed ecosystem, one of the most powerful in the world. And Microsoft's advantage is this. It does not rely on a single business line. It is a multi-threaded AI growth engine. Even if one part of the business slows, the other parts continue pushing growth. That makes Microsoft far less risky than NVIDIA, Tesla, or high beta tech names. Latest news. Increasing integration with OpenAI. Recent developments have deepened Microsoft's partnership with OpenAI even further. Exclusive enterprise-grade models, private deployment for sensitive industries, AI-enhanced Windows versions, dedicated Azure AI clusters. These integrations mean one thing. Microsoft's growth is increasingly tied to the AI future, and that strengthens valuation stability. Microsoft has turned AI from an R&D cost into a revenue-generating engine across all business units. Technical analysis. Stable, clean, institutional trend. Microsoft's chart structure is one of the cleanest among megacaps. The pullback has been mild. Trend structure remains completely intact. Key EMAs are arranged bullishly. Strong support sits between £300–320. This zone shows heavy institutional buying. MACD drifting near the zero line indicates a momentum reset, not a trend reversal. RSI is neutral, leaving plenty of room for upside. This is one of the most stable charts in the entire tech sector. If this clear technical breakdown makes sense to you, please hit like. I'll keep this pace going. Practical strategy. Entries, targets, and risk control. Best accumulation zone, £300, 320. Buy in 3 batches for long-term positions. Profit targets, $380, $420 for medium-term traders. $450 plus for long-term holders. Stop loss, $270. Microsoft is so stable that many long-term investors treat it as a foundational holding, something you can own 5, 10, even 20 years. Every major business unit contributes revenue. Every business unit is growing, and its moat is practically bulletproof. If this deep dive gives you confidence in understanding Microsoft, please hit like or follow. Your support helps me keep making this kind of detailed content. Next stock, Tesla. Now we move to the third major stock of the night. This is the stock I cover in every live session because it has the biggest volatility, the fiercest debates, the most passionate fans, the most aggressive critics. It lives at the center of market sentiment. It is both risk and opportunity. It is both tech and emotion. It is both EV leader and AI dark horse. The company is Tesla. If this is your first time here, or if you found the previous analysis insightful, please click like. It helps me stay motivated to continue delivering this depth of content. Now let's dive into the third key stock of today's session. This is the stock I analyze in every live stream because it has the biggest swings, the loudest debates, the most loyal supporters, and the most aggressive skeptics. It sits right in the center of market sentiment. It is both risk and opportunity at the same time. It is a tech stock, an EV stock, an AI stock, and an emotional battleground stock, all rolled into one. The company is Tesla. Before we begin, if this is your first time in my live stream, or if you found the earlier analysis meaningful, deep, or helpful, please take a second to tap the like button. That tiny gesture really gives me the motivation to keep going tonight. Tesla's true identity. Most people think Tesla is an automaker, but anyone who truly understands the company knows this. Tesla's core value goes far beyond cars. It is a company built on artificial intelligence, energy systems, autonomous driving robotics, software revenue, massive fleet data. Tesla is not a car company. It is a mobile AI platform company, and Tesla's competitive strength in the EV era comes from 3 structural pillars. 1. The world's largest EV fleet. This scale advantage lowers cost, boosts margin, and gives Tesla a production and efficiency edge that competitors cannot easily close. 2. The world's largest real-world driving dataset. These billions of real miles are the core material required for training autonomous driving. This is something Google, Apple, XPeng, BYD, none of them can replicate. 3. FSD is crossing from assisted driving into true autonomy. This shift is the foundation for Tesla's future valuation, whether the company is worth $1 trillion, $2 trillion, or far more. Tesla's valuation is not built on selling cars. It is built on FSD robotaxi, robotics AI software, data-driven ecosystem revenue. This is why every major institution says Tesla is the most volatile stock in the EV sector, but also one of the most promising for the next decade. If this resonates with you, tap that like button so I know you're following along. Latest developments and market concerns. Recently, investors have expressed 2 major concerns about Tesla. Global EV demand growth is slowing, competition from BYD and traditional automakers is rising. So many people ask, is Tesla's growth over? Has Tesla lost its competitive edge? But you must separate short-term noise from long-term trends. Short-term, EV demand is being suppressed by high interest rates. Financing is expensive, so fewer people buy cars. But interest rates are cyclical. Technology trends are structural. As the US moves toward a rate cut cycle, auto financing becomes cheaper, buyer confidence returns, and EV demand will accelerate again. Competition. Yes, competitors are better than ever, but none of them come close to Tesla in autonomous driving training data, AI, compute real-world fleet integration. BYD sells a lot of cars, but its data set is nowhere near enough to train true full autonomy. Competition in EVs isn't about who sells more cars, it's about who reaches large-scale driverless operations first, because that's not the car business anymore. That's an AI business. FSD V12. The breakthrough. Tesla's FSD V12 has now been widely tested across multiple regions, and the feedback from users is striking. It doesn't feel like an assist system, it feels like a driver. This is massive. Why? FSD V12 is the first end-to-end neural network driving system. Old driving systems used rules plus modules. V12 is AI driving the car directly. This is a generational leap, like the jump from keypad phones to touchscreens. If Tesla achieves real commercial autonomous driving, the company will undergo a historic valuation re-rating, from a car company to a mobile version of OpenAI. If this perspective opens your eyes, go ahead and drop a like. Let's keep going. Technical analysis. Tesla plunged 40 to 50% over the past few months. Many investors panicked, but that panic created a critical, oversold zone. Key technical structures. Strong support at 380-400. This zone has shown repeated institutional buying. RSI hit extremely oversold levels. Classic setup for a rebound. MACD is still weak, but flattening. A bottoming pattern is forming. The stock is building a sideways base. A structure that screams, not going lower, waiting for a catalyst. Catalysts like FSD rollout rate, cuts delivery recovery, new model launch robotics updates. Professionals know, the longer Tesla consolidates, the bigger the next move. When Tesla breaks a key resistance, a 20–40% surge is common. If this technical breakdown is clear, hit like. I'll keep the pace for you. Practical strategy. Entries, take profits, stops. Best entry zone, $380–400, light initial position. If a trend breakout forms, then add position. Take profit zone, $480 to $520. Stop loss, $330. If price falls below this level, trend weakens significantly. Risks, you must know. Tesla has enormous upside, but also real risks. Highest volatility among mega-cap tech stocks. Fundamentals depend on interest rates, policy, and competition. Valuation is almost always expensive and sentiment-driven. But for those who understand Tesla's rhythm, the reward can be huge. Tesla isn't selling cars. Tesla is selling the future, turning cars into intelligent platforms, turning autonomy into a business, turning robots into the next growth engine. If this deep dive helped you see the difference between Tesla's short-term noise and long-term potential, please tap like. Let more people hear this analysis. Next, we will move on to today's fourth key stock. Now we move on to the fourth stock of today's session. This is the one I recommend all steady conservative investors listen to very carefully, especially those who want exposure to AI, but don't want to endure extreme volatility like Nvidia or Tesla. Because if Nvidia is the heart of the AI world, then Broadcom is the nervous system and the structural backbone that keeps the entire AI era running smoothly. Unlike Nvidia, Broadcom doesn't show up in headlines every day. Unlike Tesla, it's not surrounded by constant drama or emotional debate. But in the global technology supply chain, its position is extremely solid and almost irreplaceable. If you want one stock in your portfolio that can rise steadily, hold steady, and not freak you out, then Broadcom is a company you absolutely must understand. If this analysis feels deep and helpful so far, please tap the like button to let me know you're still here. I'll keep delivering high-value content just for you. Understanding Broadcom's industry role. Many people think Broadcom is just a chip company, but the reality is far bigger. Broadcom is one of the most important foundational infrastructure suppliers in the global tech ecosystem. Here's a simple way to understand it. Every cloud platform you use, every large enterprise network, every AI data center, every connection between servers, very likely uses Broadcom's chip switching modules, communication interfaces, data transmission components. As long as AI keeps expanding, as long as data centers keep expanding, as long as cloud computing keeps expanding, Broadcom will keep growing. Unlike NVIDIA, which relies on explosive demand for AI training, Broadcom grows with the infrastructure build-out of the entire AI era, which is steadier, lower risk, and lasts longer. Why Broadcom is considered a stealth AI stock. The reasons are simple. 1. Its customers are the biggest enterprises in the world: Google, Amazon, Meta, Microsoft, telecom giants, governments. These clients never disappear and don't cancel billion-dollar contracts suddenly. 2. Its business is enterprise infrastructure, not consumer electronics. This means low volatility, high profit, extremely stable cash flow. 3. AI servers don't just need GPUs, they need massive networking components. For every GPU cluster, you must also upgrade network switching chips, data transmission modules, high-speed connectors, storage transport hardware. Broadcom dominates these segments. 4. The company generates incredibly strong cash flow. This gives Broadcom a defensive quality. Even in downturns, it continues to buy back shares, pay dividends, invest in long-term growth. If this helps you understand why Broadcom is a foundation of AI, tap the like button. Let more people hear this. Recent news and market signals. In the past few weeks, Broadcom has been surrounded by multiple positive news cycles. 1. Major U.S. institutions raised Broadcom's price targets. Some analysts even set targets near $500. Their reasoning? They believe AI server demand will see a second explosion in 2025, driving network switching chips, high-speed connection modules, data center, infrastructure upgrades, all of which Broadcom dominates. 2. Cloud companies are upgrading AI data centers. Whenever GPU count increases, the network backbone must double as well. This means if NVIDIA grows, Broadcom grows automatically. One is CPU, the other is circulation system. They complement each other. 3. Broadcom completed its acquisition of VMware. This is huge. VMware is the world's largest virtualization platform. This means Broadcom is no longer just hardware. It is transforming into a hybrid hardware plus software tech giant. This adds recurring revenue. Subscriptions, long-term licensing, enterprise software income. These revenue streams are far more stable than hardware. If these news stories give you a clearer picture of Broadcom's future, tap the like button so I know you're following. Technical analysis. Broadcom's price action is extremely institutional. It behaves like a stock controlled by smart money, steady, smooth, strong without sudden extreme moves. Technical structure, overview. It has broken above its prior downtrend line. This is a key bullish signal. Institutional money is shifting from watching to buying. It is now entering a healthy, upward channel. Moving averages are beginning to slope upward, a sign of early-stage trend formation. RSI is in a neutral zone, healthy and not overheated. Volume shows accumulation patterns. When you see low vol, steady accumulation, that's institutional buying, not retail chasing. This kind of technical pattern typically indicates midterm uptrend plus low volatility, plus slow institutional lift. If you like these stable, steady, high-quality stocks, tap the like button and I'll keep going. Entry, stop, take profit strategy. Broadcom's practical trading plan. Best entry zone, $340, $350, strong long-term support and institutional buying zone. Take profit zone, $420, $450, stop loss, $320. Below this level, the trend weakens. Who is Broadcom best for? Long-term investors, conservative investors, those who want AI exposure without Nvidia's volatility. You don't need to check this stock every day. It's the sleep well at night type. Risks you must be aware of. Even though Broadcom is stable, there are still three major risks. 1. Semiconductor industry is cyclical. If global tech procurement slows, orders may temporarily weaken. 2. If AI investment cools down, data center upgrades may slow. 3. VMware integration takes time. Short-term uncertainty is possible, but overall, Broadcom remains stable, strong, structurally clear, long-term positive. This is why institutions treat it as a defensive AI growth stock. Summary. What Broadcom represents in the AI era. If Nvidia builds the engines, Tesla builds the scenarios, Microsoft builds the ecosystem, then Broadcom builds the infrastructure that holds everything together. For investors who want higher stability, lower volatility, reliable long-term growth, and AI exposure, Broadcom is one of the best choices. If my breakdown helped you fully understand why Broadcom can rise, stay stable, and deserve long-term allocation, please tap like so more people can join this deep dive conversation. Now we move on to the fourth stock of today's session. This is the one I recommend all steady, conservative investors listen to very carefully, especially those who want exposure to AI, but don't want to endure extreme volatility like Nvidia or Tesla. Because if Nvidia is the heart of the AI world, then Broadcom is the nervous system and the structural backbone that keeps the entire AI era running smoothly. Unlike Nvidia, Broadcom doesn't show up in headlines every day. Unlike Tesla, it's not surrounded by constant drama or emotional debate. But in the global technology supply chain, its position is extremely solid and almost irreplaceable. If you want one stock in your portfolio that can rise steadily, hold steady, and not freak you out, then Broadcom is a company you absolutely must understand. If this analysis feels deep and helpful so far, please tap the like button to let me know you're still here. I'll keep delivering high-value content just for you. Understanding Broadcom's industry role. Many people think Broadcom is just a chip company, but the reality is far bigger. Broadcom is one of the most important foundational infrastructure suppliers in the global tech ecosystem. Here's a simple way to understand it. Every cloud platform you use, every large enterprise network, every AI data center, every connection between servers, very likely uses Broadcom's chip switching modules, communication interfaces, data transmission components. As long as AI keeps expanding, as long as data centers keep expanding, as long as cloud computing keeps expanding, Broadcom will keep growing. Unlike Nvidia, which relies on explosive demand for AI training, Broadcom grows with the infrastructure build-out of the entire AI era, which is steadier, lower risk, and lasts longer. Why Broadcom is considered a stealth AI stock? The reasons are simple. 1. Its customers are the biggest enterprises in the world: Google, Amazon, Meta, Microsoft, telecom giants, governments. These clients never disappear and don't cancel billion-dollar contracts suddenly.
2. Its business is enterprise infrastructure, not consumer electronics. This means low volatility, high profit, extremely stable cash flow. 3. AI servers don't just need GPUs, they need massive networking components. For every GPU cluster, you must also upgrade network switching chips, data transmission modules, high-speed connectors, storage transport hardware. Broadcom dominates these segments. 4. The company generates incredibly strong cash flow. This gives Broadcom a defensive quality. Even in downturns, it continues to buy back shares, pay dividends, invest in long-term growth. If this helps you understand why Broadcom is a foundation of AI, tap the like button. Let more people hear this. Recent news and market signals. In the past few weeks, Broadcom has been surrounded by multiple positive news cycles. 1. Major U.S. institutions raised Broadcom's price targets. Some analysts even set targets near $500. Their reasoning: they believe AI server demand will see a second explosion in 2025, driving network switching chips, high-speed connection modules, data center infrastructure upgrades, all of which Broadcom dominates. 2. Cloud companies are upgrading AI data centers. Whenever GPU count increases, the network backbone must double as well. This means if NVIDIA grows, Broadcom grows automatically. One is CPU, the other is circulation system. They complement each other. 3. Broadcom completed its acquisition of VMware. This is huge. VMware is the world's largest virtualization platform. This means Broadcom is no longer just hardware. It is transforming into a hybrid hardware plus software tech giant. This adds recurring revenue, subscriptions, long-term licensing, enterprise software income. These revenue streams are far more stable than hardware. If these news stories give you a clearer picture of Broadcom's future, tap the like button so I know you're following. Technical analysis: Broadcom's price action is extremely institutional. It behaves like a stock controlled by smart money, steady, smooth, strong, without sudden extreme moves. Technical structure overview: it has broken above its prior downtrend line. This is a key bullish signal. Institutional money is shifting from watching to buying. It is now entering a healthy upward channel. Moving averages are beginning to slope upward, a sign of early-stage trend formation. RSI is in a neutral zone, healthy and not overheated. Volume shows accumulation patterns. When you see low volume steady accumulation, that's institutional buying, not retail chasing. This kind of technical pattern typically indicates mid-term uptrend plus low volatility plus slow institutional lift. If you like these stable, steady, high-quality stocks, tap the like button and I'll keep going. Entry, stop, take profit strategy. Broadcom's practical trading plan: best entry zone, $340 to $350, strong long-term support and institutional buying zone, take profit zone, $420 to $450, stop loss, $320, below this level, the trend weakens. Who is Broadcom best for long-term investors? Conservative investors, those who want AI exposure without NVIDIA's volatility. You don't need to check this stock every day. It's the sleep-well-at night type. Risks you must be aware of: even though Broadcom is stable, there are still 3 major risks. 1. Semiconductor industry is cyclical. If global tech procurement slows, orders may temporarily weaken. 2. If AI investment cools down, data center upgrades may slow. 3. VMware integration takes time. Short-term uncertainty is possible. But overall, Broadcom remains stable, strong, structurally clear, long-term positive. This is why institutions treat it as a defensive AI growth stock. Summary: what Broadcom represents in the AI era. If NVIDIA builds the engines, Tesla builds the scenarios, Microsoft builds the ecosystem, then Broadcom builds the infrastructure that holds everything together. For investors who want higher stability, lower volatility, reliable long-term growth, and AI exposure, Broadcom is one of the best choices. If my breakdown helped you fully understand why Broadcom can rise, stay stable, and deserve long-term allocation, please tap like so more people can join this deep dive conversation. And before we officially wrap up tonight's stream, I want to speak directly to those of you who stayed until this very last moment. This tells me something important about you. You are serious about learning, serious about improving, and serious about taking control of your financial future. Most people in the market chase noise. They chase rumors, they chase emotional swings. But the ones who stay until the end of a 2-hour deep dive session like this are the people who will eventually stand on higher ground. If you're still here right now, I want you to give yourself some credit. You showed patience, discipline, and the desire to grow. These are the exact qualities that separate successful investors from the rest. Before we close, let me summarize one final time what truly matters in investing. Not the hype. Not the short-term fear. Not the temporary noise. But the long-term trend. The structural changes in industries, the companies driving technological revolutions. The discipline to follow your plan, the patience to let compounding work. The courage to buy when fear is high, the humility to manage risk properly. Tonight, we didn't just talk about stocks. We talked about industries, cycles, macro conditions, corporate strategy, technical structure, and real-world AI adoption. This is the type of knowledge that actually builds long-term wealth. And if tonight's content helped you see the market more clearly, if you feel more confident about navigating the coming months and years, then please, right now, tap that like button and hit follow. It seems like a small gesture, but it tells the algorithm that this kind of educational content deserves to be shown to more people. And it tells me that you want more deep, professional, research-based content on your feed. Your support truly matters more than you realize. Because every like, every follow, every comment gives me motivation to gather data, read the reports, analyze the charts, track the trends, then transform it into something clear, usable, and high value for you. I want this live stream to be a place where you grow in knowledge, you grow in confidence, you grow in clarity, you grow in ability, you grow in patience, and ultimately grow in returns. And if you stay with me long enough, I promise you, you will start to see the market from a completely different level. Tonight, we built the framework. Tonight, we laid down the foundation. Tonight, we reconnected all the dots that most people ignore. But this is just the beginning. From tomorrow onward, we will continue tracking the market. We will follow up on these 5 companies. We will break down new opportunities. We will analyze new data. And we will stay prepared for every wave, every breakout, and every reversal this market brings. If you're committed to your future, if you're committed to upgrading your financial knowledge, then make sure you hit follow before you leave tonight. I want you with me in the next live stream. I want you learning faster, growing stronger, and investing smarter. Thank you so much for being here tonight. Thank you for your time, your focus, your support, and your trust. It truly means more to me than you know. This is your host, signing off for tonight. Have a wonderful evening, and I'll see you in the next session.